Good morning, everyone. Today is March the 6th. Today's Monday, and this is the Moneyball Morning Report for the Benzinga Pro platform. For those of you that follow me on the platform, you'll notice that I sent a note early this morning about volume and what's actually happening with the short concentration here. And you can see it actually pulling through. Price action is continuing to be bullish. In a note from Jim Dalton on his YouTube channel, check it out, he talks about market profile. He mentioned that he had not seen that much short positioning in the market in 10 years. And so the script was flipped, and now we are running those shorts out of the building. So where could it go? Up is where it could go. And so what we are waiting for is the push up, the first fade to show support, and then the clamoring into price. A lot of people have short calls that they are trying to cover. We have a short call spread that doesn't expire for several days. And so that's going to give us the room that we need to shake price out for a bit and participate on the upside, which we absolutely will. So let's take a look at what's happening. In the point of just 2 days, 3 days, we have recaptured the base of the prior month and now approaching that top edge of the prior month. My suspicion is we do try to push it into 40.80, somewhere around there, 40.85. We'll be trading it long until these shorts run out of the building. Jim Dalton suggests that this is not folks who are positioned from a long-term perspective, but folks positioned from a short-term perspective that just got a little bit in front of their skis. And now this is what is going on. In general, my suspicion is that this is the type of formation we will continue to see. What we just have to do is allow this motion to move, participate in the space, and then when everything comes back into balance, then we'll be in good shape. So what are we looking at? If you see the daily, you can see there's a wick here. There was a wick here. We spent just a little bit of time at that 40.54-ish area, and so it's going to hold. I'm going to move the 40.50 line up into that 40.55-ish zone, and what we're going to be doing is just watching the market action and playing this market action as it moves to the north. Okay, so we're looking for 40.75 to really 40.88 to get rid of all of the short players that came in at this drop and decided they were just going to push it a little bit too hard. Remember, we have downside pressure in the market in general, both on the monthly and on the daily. The weekly shows this upside grind, and it was this low event at the low of February that prices came in and really started holding some traction, and it got all those short sellers wrong-footed. Let's take a look at the Qs. Hello. And the NQ is showing the same kind of strength. It is leading the market, actually is showing greater strength. It's recaptured this entire motion for the open of the prior month. So this is the zone that we are going to watch for. From an indicator perspective, we're going to see if price holds up over that level and can get into the high of the prior month. Remember, with the Qs, because there's a number of things moving in to the market, there's not a ton of volume moving into Apple, but Microsoft and Meta are gaining a little bit of traction. As we watch those flood into the market, we could easily breach up and through this weekly high that we've been staring down. All right, so that really is what we're watching from that perspective. I had the last month there because this really did engulf the last week from 2 weeks ago. It really did engulf the price patterns there. All right, let's take a look now at SPY. Whoops. We take a look at SPY and we can see same sort of sideways pressure, really trying to move up into the motion. And from the intraday formation, we are sitting up at the close of the prior, the open of the prior month. So we're going to run into a little bit of noise here. The fade is probably going to bring the shorts back in, but because the market is out of balance in terms of long-term versus short-term participation, we still are likely to bounce. So this is going to be a very interesting week, probably volatile since we have Fed Powell on the Senate floor tomorrow, on the congressional floor on Wednesday. We have the Beige Book and then the Friday employment numbers along with everything else. So it is going to be a volatile week. And you know what? We're going to position and participate well, like we always do. Pay attention to the breaches and then the undercurrent of who might be in trouble. And the storyboard right now is that all the short calls that have been sold are really treading water right now. And the best place for them to get jammed out of is the place where they took the shorts in the first place, and that's going to be anywhere between this 405 and 407. So we're going to watch to see. And remember, when we have spaces like this where people are really caught flat-footed, they can always go well past the level that we expect them to fade into. So trade your short-term directional motion. And by that, I mean, hey, listen, are you looking at the hourly charts? Are you looking at those 4-hour charts? Make sure you're following that direction. All right, that's it. And I will see you all on the Benzinga Pro platform.